Phani Shekhar, Fund Manager PMS at Angel Broking, joins in now to make sense of what's going on in the market. Phani, always a pleasure having you with us. What do you make of the up move that we've seen so far? Nifty up a good 1.6%. What do you think is triggering this kind of a rally today in trade?
Well, after the rapid decline in the market, these kind of sporadic moves are always expected. Purely from a theoretical perspective, these moves, these opposing moves can happen either on the upside or on the downside. As an investor, one should not be swayed too much by these moves. What's important is, as we have been always pointing out for almost a year now, that 2013 is again likely to be a year that's going to reward bottom-up investing. So you still have spaces in the market that if you are successfully able to avoid, like infrastructure or PSU banks, you should still be doing much better than the index.
Good going for the markets. You're seeing good moves coming in for Bajaj Auto, ACC. The Bank Nifty has sprung up at the high point of the day, and you're seeing a good 1.5% gain coming in for both the Sensex as well as the Nifty. ONGC now holding up about 4.25%. Ultratech Cement, Reliance Industries, and of course Sun Pharma is topping the charts right now with a near about 5% move. More importantly, it's the currency which has seen some strength after starting off at that 60.32 odd mark. We're now seeing the currency slowly come closer to that 60 mark. 60.19 is where it's at in trade. Phani, what's the sense on the rupee right now? And does it seem like, given the way the rupee has been out, is panning out the kind of weakness that we are witnessing right now? And of course, given the current account deficit data that we saw, it is going to be a tough job for the RBI in terms of the elbow room that they may have for cutting rates come July policy.
Absolutely, and the evidence was out there for us to see on 17th of June, and going forward also I think since the pressure on rupee would continue, it will be very tough for the RBI to justify any interest rate reduction. At the same time, if you closely analyze the noises coming out of both RBI and New Delhi, I think it seems as if it's fait accompli that rupee is going to depreciate. Maybe it will stay in a range of anywhere between 58 to 62, and the government is bracing for those kind of levels, for a life at those kind of levels. So to that extent, I think it should not come as any surprise to them or to the street that RBI, after initially attempting at least twice to contain the volatility, did not yesterday intervene in the market, and rupee easily breached the 60 levels. So I guess beyond a point, central bank does understand that it is futile to fight the forces of the market, and I think there is further depreciation out there in the rupee.
Phani, let's also talk about the energy pact. There is a huge amount of anticipation that the government is going to go ahead and hike gas prices today. Do you see that happening? What's the best case scenario? What's the worst case scenario according to you? Because the stocks are already rallying in anticipation of a gas price hike.
So let us start with the worst case scenario. The worst case scenario is that nothing happens and it is status quo. And to that extent, I think you will have disappointment in stocks like Reliance, ONGC and Oil India. However, considering the situation that we are in, where we desperately need foreign inflows and we need to boost the foreign investor sentiment, expect a gas price hike. That's a reasonable expectation, and if it were to happen to the tune of around 6.2 as is being widely spoken about, then I think it will be good for the market. I mean, in a very near-term perspective, because what it does is it adds another 15% of the index, which is the oil and gas segment in the leadership bracket, apart from IT and pharma. So that much better for the market, because you have stocks like Reliance, which have been underperforming for the last 4 years. Suddenly, in a weak market, they can assume the mantle of leadership. Not to suggest that they will blow the daylights out, but certainly they will not fall much, and there might be another 5 to 10% appreciation in those kind of stocks. We already seen evidence of that in ONGC. The stock is up 4% today, and I think if the gas price hike were to take place, I guess it will be both good for the markets. However, over the medium term, there will be issues on the subsidies, especially related to fertilizer, and what happens to the inflation due to escalation in both fertilizer and the power cost. But that's something that we would tackle closer to October or November.
So Phani, I mean, give us some stock ideas which you at Angel are recommending right now from a buying perspective.
Private sector banks remain evergreen favorites, and they have done reasonably well. Apart from that, large cap IT and pharma is something that we are quite constructive about. Gas price hike, again, oil space looks good, upstream, ONGC and Reliance. As far as mid caps are concerned, there one has to be very selective. So we have been suggesting sectors which are relatively immune to both government policy and the rapid volatility in the currency that you are seeing. So we are liking sectors like agriculture or a print media where stocks like Jagaran or HMVL, Jagaran especially after the recent correction, housing NBFC stocks like a GIC Housing Finance. These are the kind of stories that we are advising investors to buy into because these are reasonably good balance sheets, relatively immune business models. And over a period of time, if you give yourself 1.5, 2 years, then I think they will do very well for yourself.
Phani, always a pleasure chatting with you. Thanks for joining in with that perspective.